Sandip Agarwal, fund manager and co-founder at Sovelo Investment Managers, who joins us on the show. Sandip, good afternoon. Thanks for joining in. What are you making of Ultratech's entry into cables and wires? How do you think that things could pan out here for the entire sector now?
So I think, it is very hard to comment on a specific company because we run a PMS, but let me give you some perspective on the sector. So obviously what we have seen with paint industry also a few months back when, a new entrant came, after that, the multiples have got derated because there is obviously a fear that then when a challenger, the competition comes in, it is in a challenger position and it tries to gain market share through, playing on the margins. So that is a risk because of which, there is always a derating when a new competition comes in. And I think with Ultratech's announcement, while practically, things may change on the ground maybe in 2029 or maybe later. But what happens is that this sector's multiple, whatever they were, now people will be wary to give those multiple anytime soon unless the growth numbers go up substantially from what has been forecasted. So if let's say today growth forecast is 20% and it actually turns out to be 25-30%, in that case, the multiples can again recover. But otherwise, a new entrant and a well-funded good name coming in always leads to derating for sure.
Right. Well, moving on. What are you making of BSE at the moment? I guess you can't talk about stocks, Sandip, so why don't you just give me your view on the capital markets sector in general and whether or not there are opportunities here?
So, we love this space, the financial intermediary, the capital market space, the brokerage space, and all these spaces because, see, the penetration of equity in India is still very, very low. And we believe as equities penetration keeps going up with more financial awareness, I think, all these stocks will do well. Now, at a particular point of time, obviously, the stocks do discount a lot of positives which will happen in future. And because of that, sometimes what happens that, the stocks can go through some time correction or some correction at a point of time. But we believe that this whole space, whether it is the depositories, whether it is the exchanges, whether it is the brokerages, whether it is the wealth management business, I think structurally they are going to be very good for next 10-15 years. And that is the way we have positioned ourselves also.
Okay, Sandip and Kush, stay on. One more stock that could be in focus tomorrow is Jubilant FoodWorks, right? They're hosting their maiden in-person analyst meet today. Mahima joins in with the key takeaways. Mahima.
Jubilant FoodWorks is set to host its first physical analyst meet today, and before that they've released their investor presentation. Now a couple of guidances that they've given in the presentation. First one, that they've said that they'll open 5 new food platforms this coming year. They've also said that the store count by FY28 will reach 3,000 stores. In terms of the town network, they will reach 700 new town networks, and they're targeting brand power growth in Gen Z segment by around 500 basis points. They aim to double in fact, they've said that their revenue and profits both will grow at a double-digit CAGR, and a 200 basis points margin improvement is something that they're observing. In terms of their overall built-in food platform, around 1,000 crores of annual sales is what they're expecting, and this will happen along with scale-up of their digital platforms. Free cash flow maximization is something that they're expecting overall. Now, all of these things, of course, have been mentioned in their investor presentation, but a couple of things to watch out for will, of course, be questions like the competition coming in from Zomato and Swiggy, how DP Eurasia after the acquisition has performed because Q3 was weak for them, and of course, how and what is their outlook with respect to Popeyes and etc. So all of these questions will be something to keep an eye out in their overall investor presentation, and of course their meet as well.
Yeah, so the takeaways were from the investor presentation, of course, that Mahima showed you, and analyst meet to happen today. Now, ahead of the meet, a clutch of reports have come in on QSRs as well. Some positive on the space, but not on Jubilant because of the valuation reasons. Sandip, do you look at the QSR space at all? Have you invested or have you looked at investing?
So we look at this space in a very interesting way, Niraj. I will tell you how we look. So, we believe that the OTT platforms like Netflix and all are enablers of this kind of businesses because generally you order this kind of food when you are on an OTT platform or you are enjoying some content. And the key risk to this segment, or the key draggers to this segment, is the whole health awareness things, whether it is some food advisories, some kind of recommendation, some health experts. And also the way to look at this space is that you will keep on getting growth from the rural side, and you have to reduce the access of growth from the urban side, because in urban side there is a lot more awareness against this food because of all the programs which are run by health experts and the social media and all. And at the same time, there is a aspiring rural population which keeps on aspiring for more and more of this food. So, the growth rate has to be rural minus urban, and that is the way you have to forecast. So if you do that math, then whole this QSR space, if you see, seems to be little expensive given what kind of growth can happen in next 5-10 years. So that is the only risk. Otherwise, it is a fantastic space to be in.
Well, at least in terms of stocks and the way the price movement has come through, again, more or less falling in line with what the broader markets have done. That's not very encouraging. So you have, Devyani International, which saw a little bit of perk up about a few weeks ago, but once again was sold into, as is the case for Westlife Development, pull up something like a restaurant brands, Asia, and that exactly hasn't done well. In fact, restaurant brand is on a very prominent decline, unlike something like a Devyani International or Westlife. Maybe we can take one of these names and take a technical view as well. Let's take up Devyani International. Kush, if you can give us some sort of an idea about how to trade this one at this point in time.
Well, among all the names that you mentioned, this is the only one that stands out, technically at least, because this is the only one holding above or just around the 200-day moving average, other than Jubilant FoodWorks, of course. Most of them have been, beaten down and how. So even this, by the way, is just consolidating. It's got a falling trend line resistance. So this space is more of a wait and watch kind of a list. You want to pick the one which has least underperformed. You don't want to be a part of such a list. So I wouldn't really recommend to trade into this. But if you were to pick one, then Devyani International is something that you can consider with the stop loss near the 168 mark. But as I said, all in all, as you rightly pointed out, most of these players have been beaten out of shape. And the ones that are holding ground are just that, they're holding ground. There isn't any particular traction or momentum just yet in some of these names.
Okay, hold that thought. We move on and take a look at the aviation space. We have India's budget airline player who flew back to positive territory in earnings, a profit of around 25 crores for the December quarter. And Mahima is back with us to tell us about the key highlights from the earnings. Mahima, the street is not looking impressed with the earnings. What can you give us in terms of details?
So, in terms of the key highlights of the earnings, well, there was an improvement of around 18% in available seat kilometers. The company has turned profitable, but this is because of one-off other income. In terms of the revenue passenger per kilometer rose by around 23% quarter on quarter, and passenger load factor also has risen to 84% from 81% QOQ. Lastly, cost per available seat kilometers also improved QOQ. So, operational metrics in terms of SpiceJet are improving. It came out with both its Q2 as well as Q3 earnings, because Q2 earnings were pending to be reported. In terms of Q2 earnings, revenue was down by 36%. EBITDA lost to 210 crore and net loss stood at around 442 crores. But Q3 revenue was down by about 35%. EBITDA stood at 85 crore, margins stood at 6.9, and net profit at 25 odd crores. And this is, of course, because of a one-off rise in other income. This other income stood at around 419 crore, and this was this other income came along from restructuring of lease obligations with lessors. Now, in terms of a report on SpiceJet on the back of earnings, INCRED says that it believes that a scale-up of its operations could reduce FY26, could reduce in FY26. The company will be able to retain the entire benefits of the reduction in overall cost per available seat kilometer, and they have factored in that SpiceJet's entire fleet will be operational by FY26. In terms of QIP utilizations, overall 3,000 crore was raised, out of which 2,400 has been utilized. Out of which 600 odd crores have been utilized to pay off GST, TDS as well as EPF dues, and Around 1200 odd crores have been used to settle the disputes with aircraft lessors, and the claim was around 1700 odd crores. Lastly, auditors of course have continued to flag off the going concern which is in danger, but management is of the view that the accounting needs to be done on going concern basis, and it's appropriate accompanying the company statement. So both the views are contradicting, but this has been the case for SpiceJet since last year as well.
Interesting. Okay, thanks, Mahima. Well, you know, Kush was on the button this morning wherein he said that he doesn't quite like, this morning or yesterday, he doesn't quite want to go out and look at SpiceJet. Sandip, last week a clutch of reports came in which said that because of the Kumbh, Interglobe will benefit. What will help Interglobe will probably help SpiceJet as well, right? So, is this stock bottoming out, you reckon? I know it's that business which is not high ROC, high quality, etc. right now, but is it attractive from near-term triggers perspective?
So Niraj, fortunately, I visited Mahakumbh and I was at the airport like 7 hours before the departure back to Ahmedabad. And I spoke to a lot of people there on the airport who are handling the airport. So it was a temporary airport in which approximately around 20 aircrafts of SpiceJet and 20 aircrafts of Indigo lands every day, with a total capacity of 80 aircrafts landing. So I can tell you a little more about that. So, you know, everyone has made a killing in Kumbh. There is no denial about it. And my view is that, you know, can only Indigo carry the number of people the way India is growing? I think that is not possible. Obviously, there is Air India along with Vistara, but I believe that there is space for more airlines. And while, you know, SpiceJet's balance sheet is very, very stretched and it is levered, and this kind of balance sheets are not liked by every investor. So I think from a stock bottoming out or not, it's very hard to give that call. But I believe that, you know, there is a space for one or two more airlines because the amount of traffic which the country has and the amount of traffic, the way it is growing, there will be, you know, space for more players. And if there is a rational player who can keep control on the cost and efficiency, there is money to be made. Indigo has shown us that, you know, money could be made in this industry.
So are you biting the bullet, let's say, and going out and thinking that it's worth maybe going for a SpiceJet at the current levels?
Oh, you know, it is very hard to comment on a specific stocks because we run a PMS. But let me tell you, we don't have so much guts actually. We don't take so much risk.
Okay, fair call. Yeah. Sandip, final question to you, and then a question to Kush on some of these names as well. But Sandip, to you first, and which is some of the two-wheeler names or auto names which will come out with the numbers. Now, do you expect any fireworks or do you expect it to be a tepid month?
Honestly speaking, you know, the way things are moving and the way there was a liquidity crunch in between, I believe that this month will not be exciting. But let me put it this way that, you know, the relief which has come in income tax, that will definitely have a positive impact going forward. The only challenge we are facing is that this is a sector which has been a blue-eyed sector for everyone for quite a bit of time. And I think, you know, the positioning in the sector is very aggressive. So, you know, almost everyone is overweight. Almost everyone wants to have these names. So while there is a tailwind because of the tax side and all, there has to be really, you know, good numbers or strong numbers to maintain the momentum. That is the way we look at it. So you know, it is in a good run up, good times. So it is continuing within good times. So that is the way I would put. So price to perfection is the risk.
We leave it at that. Thank you so much for joining us and taking us through your views on the markets.